I'm the director of the life department at Stonehill. Lexi Springer is our case manager and our quoting specialist. So if you ever need anything, feel free to reach out to either of us. We're super excited to have Dan Hudgens, our RVP from Protective, here to put on these webinars for our agents. We feel that they're going to be very helpful to all of you. So Dan, I'll turn it over to you.
Okay, awesome. Thank you. Appreciate it. Yeah, I've been very fortunate to work with Lexi and Jamie over the years, quite a few years now. Just getting to know Janine, so appreciate working for her, working with her and for her. I consider myself an employee of Stonehill by default. But yeah, I mean, Jamie mentioned this is going to be a web series. So this first call really is going to be focused on the basics of life insurance. We're going to go over a couple of different things, but I just want to give you a little bit of my background. So I've been in the business about 24 years. I started as an agent, so I'm familiar with what you do every day and the challenges that you face. I went over to the brokerage side, so I've done what Jamie and Lexi and Janine do. And then now I'm on the carrier side. And so I've kind of gotten that perspective of all three facets of this business. And I'm going to interject that into this web series, because I think a lot of times if you're talking to, your brokerage people, they have certain, information. You talk to the carrier people, they have information. I just kind of want to wrap it all together. So what we'll do is we'll talk about some of these things that might seem basic, and they are basic. So we'll go in a little bit just about Protective, just so you know who we are. Then we're going to talk about identifying a solution. So that's really products. We're going to talk about what life products are, what's the difference between them. We'll kind of go into a needs analysis and how you do that with your customers to really lock down the right amount of insurance that they might need. We're going to go through some field underwriting, and then we're going to talk about how you submit business efficiently. And again, this is a remedial type topic, but I'm going to interject those things that I think are important, that I've learned a lot along the way, that hopefully make it easier for you as you get into this business, or if you're just trying to increase your life business. Some of the things that are gotchas and things you wish you would have known earlier, and things that are important to help you. So I don't want you to think that this is just going to be super basic and remedial, because there's going to be a lot of information here that I think will be valuable. And then we'll build on all of these topics and get into them in more detail on future web series or future web calls. So that's just kind of setting it up a little bit, but I wanted to talk a little bit about Protective. So for those of you who are not familiar with Protective, we've been in business for 115 plus years. We just went through a rebrand this year. So this logo that you're seeing on the screen is a different color, and it's a different logo for us. And we did that for a lot of reasons, but really it's to emphasize what we are about at Protective, which is protecting people. We're fortunate to have a name that describes exactly what we do as an insurance company. We protect people. And so we wanted to stand out from a lot of the other companies. Our former color was blue, and there are a lot of insurance companies that have blue colors. So the indigo is the actual official color we wanted to use to set ourselves apart a little bit. But to give you some information on the company, we like to talk a lot about numbers. So we have almost 13 million customers. We have over $1 trillion of life insurance in force, which is a pretty staggering number. We have about 3,600 employees. A lot of them are in our home office in Birmingham, Alabama. I'm actually remote. I'm based out of Salt Lake City, Utah, just north of Salt Lake City. And really the number that I think makes the most impact here is the one in the middle, the $4.9 billion of claims that we paid to over 887,000 beneficiaries. That's why we're in this business. We are in this business to protect people and provide them with a product that ultimately, when that beneficiary is going through arguably the most difficult time in their lives with the death of a loved one, we're there to help them, at least on the financial side. So that's what I really want to bring heart to this whole conversation is this is why we do what we do. We do it so that we can pay out the financial needs, financial benefit to satisfy the needs of the beneficiaries who again, that it will be the most difficult time of their life when they have that death. So a lot of what we're going to talk about today is available in a life checkup kit. So if you want to go to our website, it's protective.com. There is a financial professional section. It's just up in the upper left-hand corner. And you can go to sales strategies. And a lot of the tools that we're going to use today are going to be beneficial to you ongoing as you work with your customers. And so we're going to talk about some of these documents, but there's a guide for you, the advisor, that goes through a lot of what we're talking about today. And then also on future calls, there's a guide that you can actually provide to your client. And then there's some tools like a checklist for getting started and needs analysis. So we'll go through all that stuff, but I just want to let you know there are documents that can help you as you go through this life insurance process, so that you don't have to frantically write all this stuff down while we're going over it today. So let's jump into the first thing, which is really, how do you identify a solution for your client? It all starts with having that conversation with a customer and bringing up life insurance. That's usually the hardest thing. And I'll warn you, the experience that I've had, and I think a lot of people have, is when you're sitting down with a client, you're talking to them, and you just say something like, "Hey, do you have life insurance?" It's a really hard conversation starter. A lot of people aren't just like, "Yeah, I don't have life insurance. I really want to talk about it." So you really need to find out what is important to the customer. What's the highest priority for them? And so that's really what's important in buying and selling life insurance. And so this is an example here of one of those priorities that we see in with our clients when we talk about who needs life insurance. Well, it's estimated, and I know there's a lot of different numbers like this, but it's estimated that it takes about $233,000 to raise a child. This was a statistic that came out from a research study from 2005 to 2017. So without the wage earner in that household, could a surviving spouse afford to raise a child without that income? Now you start talking about, what if they have multiple children? Now you talk about, what about their home? Are they planning on paying for college for those children? What about all the other things that they have going on, like their car payments and their credit card payments and things like that? So those are the tips and tricks that you can kind of use when you're talking to customers to try and identify what is most important to them when it comes to life insurance. And when we talk about what life insurance can do, there are a lot of different things. There's primarily three key things. So it can help replace an income when a wage earner dies. It can help supplement retirement, and it can also be used for estate purposes. So three of the key reasons why people buy life insurance. And if we kind of look at the income, really the income replacement is the driver on that. And that's where most people gravitate. Hey, my husband or my wife, they earn this much money. If that money wasn't there, we would really struggle. Part of that can be their mortgage, right? We need to make sure we can stay in this house and live here with our family without being disrupted even more than we already are. Sometimes it's children's education that's important to them. And sometimes it's just life events, weddings, different things that might come along throughout the life of people in that household that they might have significant concerns about when it comes to financial needs. So income is generally the driver that we use, not only from a conversation starter, but also from an underwriting perspective. How do we justify the face amount? But there are also retirement supplement income that we can build into life insurance. People that have large estates might need some estate planning. They might need to transfer some of the wealth that they've accumulated over their lifetime that might be in a vehicle that is not very efficient for transferring money down to a future generation. It also could be for business protection. So these are a lot of the things that life insurance addresses, that as you're talking to your customers, those are key talking points of why life insurance would be important for them. It's not always just, hey, you need to have some life insurance. You need to find something that's very impactful to them. So as we get into the types of life insurance, really there's two key types, right? Term and permanent. And we'll go into the details of these and kind of some of the basics. But really, term insurance can be looked at as the least expensive of the options, where you just get a death benefit. It's very, very simple and efficient. Then you can get into your permanent plans that offer long-term coverage and can provide some additional values. So if we look at on a kind of a scale here, we can see, the different categories from left to right. You've got simple. As you go further to the right, you get more complex. You get a lower reward on the left side. You get a higher reward on the right side. Obviously, cost is going to be less as you go from left to right. But when we get into the permanent, we'll talk about how that's a little bit different. So we'll kind of break these down, but I just wanted to give you a feel that those are the types of products that are generally sold in the market today. We have term insurance, whole life, universal life, indexed universal life, and variable universal life. And again, don't get caught up too much in a lot of these products, because future calls that we're going to do, we'll go into each one of these in a little bit more detail. So we'll just hit on them really basic today. So we look at term insurance. I mentioned usually it's just for a specific period of time, 10, 15, 20, 25, or 30 years. Although Protective and a couple other carriers do go as high as 40 years. So I kind of want to throw that out, because sometimes you'll talk to a customer who loves the idea of term insurance. They really like the low cost and the fact that they can lock it in for a period of time and not have to worry about the mechanics of it. Well, you can now do that up to 40 years. So keep that in mind. But at some point in the future, that coverage will disappear. It will either end, or it will be too expensive for them to continue past that point. So it is designed really for addressing short-term needs. So those are the pros and the cons. It's very inexpensive. You generally can purchase as much as you need because of the cost. The negatives or the cons really are, once you get to the end, you have some pretty significant renewal premiums if you need to keep that coverage. It's also the most inflexible. You pay a premium, you get a benefit. That's pretty much the extent. And there really is no cash value at all. So it's not complex in the mechanics of it. So when we talk about term life insurance, there's really four kind of reasons that people want to buy it. They want it because they're on a limited budget. They have a limited amount of money that they can use to pay for life insurance. They usually do it to protect families, people with families. They have children, they have a spouse. They need to make sure that those people are taken care of in the event that they're not there to provide their income. It's generally short-term needs and can cover those funeral costs, other expenses that we've talked about. And it can supplement existing insurance policies. So if somebody does have permanent life insurance, and we'll get into that, but it's more expensive and usually buy less of it, this can supplement that need for the larger face amounts that they might want to have at a lower cost. So those are kind of some of the reasons that people gravitate towards term insurance. And I just want to mention that Protective has two term products, because everything I've just told you holds true for the vast majority of term policies out there. We have a product called Classic Choice Term that I had mentioned. It does go up to 40 years. And it is everything that we just talked about. It's very streamlined. It's very easy to understand. It's affordable. It's one of the lowest cost products on the market. And it does follow that normal term structure, meaning if you have a 20-year policy, you have a level premium for 20 years. You have that death benefit guaranteed for 20 years. But once that 20 years is up, if you want to keep it going after that, the premium will increase significantly, because again, it's designed as a short-term solution. But we're one of the few carriers that actually has two term policies. And our second term policy is called Custom Choice UL. It's a little bit different. So kind of take part of what we just talked about with term insurance and interject a little bit more flexibility. It is only 10 to 30 years in duration, but it does have some flexibility in how they pay their premiums. It's a little bit more customizable. And what it does is the opposite of what a typical term policy does, which at the end of, say, that 20-year period, the client's actually going to get a bill for the same premium they've paid for that full 20 years. And the death benefit will be lower in that 21st year. And then they can keep that coverage for 1 year if they want. Then the next year, the premium again will be the same as they've always paid. but the death benefit will be, again, lower in that next year. So what it does is it puts some control in the client's hands of how long they want to keep that policy after the 20 years ends, for example. So I just wanted to throw that out because in this industry, there's no cut and dry, right? When we talk about a certain product type or a certain policy design, they're not all the same. They all might be similar, but there are some definite variations between them, and Protective has one of those in our custom choice UL policy. So just keep that in mind. We'll talk about that more in detail as we go on. So when we get into the permanent policies, you can kind of see here, there's a lot of different benefits for permanent policies. So let's just start with whole life. And again, we'll go over these fairly quickly because we are going to go into more depth on these products on future calls. But I just want to give you the general flavor of how these work. So whole life, generally a very good permanent policy that provides a guaranteed death benefit. It also provides a guaranteed cash value, usually by way of a fixed interest rate. So clients pay a premium. Part of that premium goes to cover the expenses of the policy. The rest goes into a cash value that can be used later down the road. It is usually the most expensive of the products because not only are you guaranteeing the death benefit, but you're also guaranteeing all of that cash. You're taking on pretty much the risk of building that cash by way of your premiums. And then the insurance company will contribute some of that in a fixed interest rate. It is also not very flexible. You can't adjust the face amounts and the premiums, but it does provide that lifetime death benefit. There's generally a fixed interest rate, so you know how much that insurance company is crediting to that cash value. And it provides you with that cash value that you might need in the future to use. So whole life, generally very efficient in generating cash, but is generally more expensive. Universal life is more flexible and it is more versatile. So we look at it as death benefits with lifetime coverage. Again, we're talking about permanent products. There is usually a fixed interest rate that's allocated there. And it does allow for that flexibility in the premium that a whole life policy generally would not have. So think of clients who might need to pay more premiums up front and then stop at retirement. Or think of clients that might need to have a little bit different premium structure for a couple of years because of financial concerns. They can actually adjust premiums and then catch up later on if they need to. So it is more flexible when it comes to premium payments and also death benefits. So the pros, definitely available for lifetime. There is usually a guaranteed minimum interest rate. So the crediting rate that's available on most universal life policies is not aggressive. It's usually very conservative, but most of them will have a minimum that it can't go below. So it is also the most flexible, and it does provide you with that cash value growth and access to that cash. It is more expensive than term insurance, and sometimes it can get a little bit more complex, especially when dealing with term insurance. And as I mentioned, there is generally a lower interest rate than some of the other permanent products out there because, again, it is designed as a little bit lesser of a risk than the other products we'll talk about. So that's a little bit about universal life insurance. Then we move over and we've got indexed universal life. This is what scares everybody. Everybody, when they start talking about indexed universal life, they all of a sudden get scared. All you really need to know about indexed universal life is instead of the company saying we're going to credit a certain interest rate, they're mimicking the index, some kind of an index, like example, the S&P 500. So it works the same as a universal life contract, but instead of the company saying we're going to credit 3%, the company says whatever the S&P does over that 12-month period, we're going to credit that up to a certain cap amount. But if it's below a zero floor, some have a little bit higher than a zero floor, we won't take away any money from that policy because of a negative return. So that's some of the interest that indexed universal life has with people is it gives them the option for a little bit better a cash accumulation without the risk of losing money if the index that it's mimicking has a negative return. And don't get confused. It is an index that it mimics. So you're not investing. The client is not investing money into that index. The money is staying with the insurance company. and they're just saying, hey, the S&P did this much return, we're going to credit that amount. So for example, Protective's index, we have a cap of 8%. So anything above 8% that the S&P returns, we just are going to credit up to 8. And then we have a floor of 0. So you can see, compared to a universal life that might credit 3 or 4%, you might get 8% on an index policy, but you also might get 0 in a year where there might be a negative return. So again, a little bit more risky, but also a little bit more of a reward in those positive years. We kind of just went over these, but the pros, you've got the lifetime coverage again, because it's permanent, very flexible on the premium structure. You have the growth and the access to the cash value, and it does offer that protection if the market index drops below 0. So you're not going to get negative returns applied to your cash values. It is a little bit more expensive than a universal life, which obviously results in a little bit higher premiums. But again, more risk, more reward for the customer. The last one is variable universal life. I'm not going to go into much detail about variable universal life because I'm not sure if many of you are selling that. But variable universal life just has an additional investment component to it, where the client is actually able to invest in underlying funds. And those do not have generally those floors that we talked about on an index. So you might lose money in that index fund, which would result in lower cash values. But you also don't have the caps that are available on an index. So higher returns, you will grab those, but you have the risk of the negative returns. This product is really kind of a chameleon, because it can be designed with guarantees. It can be designed with cash accumulation in mind. There's all kinds of options with variable universal life. And that obviously needs to be looked at, significantly different than the fixed products that we've just talked about. So when we talk about permanent life, that's what we want to really focus on, is the clients need not to have just a short-term fixed date that they have this coverage. They need it to last until they die. So usually when you hear that term coverage for life, it can be subjective. It doesn't always have to mean it will run to age 121 on an illustration. It just might mean that it's expected to last past their life expectancy. But it is definitely a longer term protection. Then you also incorporate the protection with the cash value and the access to that cash value. So clients can actually use that money should they need it in the future. And it's really good for advanced planning needs. So those are the types of clients that are looking more like permanent coverage would be a better solution than term insurance. So that's just kind of a quick overview there of the products. Again, I don't want to go into them all in detail, as we'll cover them on a future call, but I did want to go over the permanent products that Protective has, at least our fixed products, because we do have some great solutions. So if you look on the left side, that's our guaranteed universal life. It's called Lifetime Assurance, and it is very basic. You can design this to guarantee coverage for somebody all the way up to lifetime. It has to guarantee at least to age 90. But it's a very, very basic universal life. The client pays a premium. They will get a death benefit. You just need to determine how long they want that death benefit to be in force. And then there is a return of premium endorsement that allows them to recover some of their costs, 25% of their cost, should they ever surrender that policy after the 10th year. Then we have our Advantage Choice Universal Life, which just adds more flexibility. It's much more flexible than the lifetime assurance, and it does have a larger return of premium endorsement. And then we have our Index Choice UL, which is the most simple index product that you will run into in the market. It's almost like buying it out of the box. You don't have to know a lot about markets or indexes or strategies. You can only buy it one way. But again, it gives that client both guaranteed death benefits up to age 90, and then current side protection for however long you need it after that, based on that S&P 500 index, using the cash value to leverage when they might need access to that. So those are the products that Protective has, based on those different variations we just talked about. And then I want to hit on group just a little bit, because a lot of times clients will tell you, oh yeah, I've got group coverage. I'm good. I don't need any life insurance because I've got group coverage. Well, there are some pretty significant differences between individual life insurance and group. Generally, the cost is less with group coverage, but is also much more restrictive. So the employer usually determines how much coverage you can get, and it's usually a multiple of your salary. So it is limited in how much you can actually acquire. There's also restricted or required health assessments with individual where you don't usually have that with group. That's why people like group, because they don't have to take exams and they don't have to answer a lot of medical questions. But they're not transferable on the group side in most scenarios. So if you work for a company and they give you, let's say, $300,000 of group coverage, you can't really take that with you in a lot of scenarios if you leave that company. So if people are relying on group coverage to cover their family needs, they better hope they stay with that employer or go to another employer that has coverage if they hope to have that coverage. So those are some of the talking points you can have when clients say, no, I have coverage with my group. Most of the time, it's not going to be enough to cover what they need, and they're not going to be able to take it with them if they ever leave that company. So those are a few talking points on the group coverage. So I want to go into a little bit of needs analysis. And I don't want this to be overwhelming because I think there are some simple ways to approach needs analysis. Whenever we talk about buying policies, we should also be talking about maintaining a policy, which means it's rare that you will buy one life insurance policy or that you will sell one life insurance policy to a customer. There's just too many things that happen over a person's life that change their situation. They get married. They take on a new job, they have children, they might care for aging parents, they bought a home, maybe they just started a business, maybe they just got divorced. So these are all things that are going to trigger different needs throughout their life. And we need to make sure we address those. And so part of that kit that I talked about, that life checkup kit, is a getting started checklist. And it's a very simple one-page document that you can use with your customers. You can hand it to them and say, let's talk about what's going on in your life. And they can check the box of things that has happened to them or that they are going through. So if they say, yes, we just welcomed a new member to the family. Oh, okay, great. Let's talk about that. How does that impact the family? How does that impact your finances? If they say that there's the top part are kind of the life events, and then the bottom part are going to be things that they might be interested in. So if somebody says, hey, I want to review and change my beneficiaries. I do have life insurance and I want to change my beneficiaries. Well, there's a reason for that. And it could be that they had a child. It could be that they got divorced. There could be a whole bunch of different reasons for the beneficiary change. So these are trigger points that will allow you as the agent to have an idea of what's going on in their life and what is important to them. So then now you can talk about life insurance to satisfy that specific need rather than just a general, hey, you need some life insurance. So this is a great document. It's a PDF document. You can email it to a client. You can give it to them when they come in for a meeting. And it just helps set the priority and the mindset of the client to help you get into topics that are important to them. So a couple of things with the needs analysis, though, is you really need to make it simple. One of the most simple ways of doing it is just looking at the income replacement that they need. So how much money do they earn right now? And how long are they going to need to earn that until they retire? That's how much their family is used to them living on right now. And if you have multiple breadwinners in a household, great, you do that with each of them. One earns this much, one earns this much. They're going to need both of those incomes generally, or at least a portion of both of those incomes. They might want to build in some immediate needs, some funeral costs, some medical expenses, and then they might want to fill in some debts. They might want to get rid of some credit card debts or pay off a car, maybe even pay off a house. But the more complex you make it, the more confusing it can be to a customer. And the key is to let them give you the figures. Ask them for the numbers, because then they're the ones dictating what's going on in their life. A lot of times I've met with agents and I've dealt with advisors that think they know really their client's situation. And so they just come up with a number and they say, hey, yeah, you need at least this much. Well, that number, whatever it is not going to be important to that customer because they didn't come up with it. So make sure you let them give you the figures. And so we have a document. It's a needs analysis document. It's a very simple needs analysis. It's a one-pager We have a more complex one if you do have a client that has a lot more, situations going on. But this one is very basic. The first two lines you can see there is how much income do they need to replace and for how long. Then you can add in some cash for immediate needs, pay off some debts and obligations. You can factor in if they already have some savings, or some retirement. You don't need to duplicate those. And then that gives you your life insurance need. So don't overcomplicate the needs analysis. There are a lot of needs analyses out there, and Stonehill might have something on their website. We have one on our website that you can go in and just key in the figures and it'll give you the number. But you need to make sure you're accounting for at least their income, their cash for immediate needs, and any debts and obligations that they might need to pay off. And don't make it too overwhelming for them. The one thing that I've always tried to emphasize with agents is you don't need to sell necessarily all of their insurance need right now, because sometimes people just can't afford that. If it's a $2.5 million need and it's a legitimate need because maybe they're younger, the younger you are, the longer you have to replace that income, which means more death benefit is needed. You start building in college education and retirement plans, and all of a sudden you've got a young couple in their late 20s that needs $5 million of life insurance, and they can't afford that. So go back to that checklist and find out what's most important for them. If they just bought a home, maybe the most important thing is for them to be able to stay in that home. So you protect that home so that that surviving spouse and those children can at least stay in the home and regroup if something happens to that breadwinner. So don't feel the need to do it all at once, but this will at least help them understand what their complete need is. So that's the needs analysis in its most simple form. I want to move on to field underwriting. This is actually one of my favorite topics, partially because I really like underwriting. I'm kind of a weird guy. Some people really hate underwriting. I really love underwriting, but also because it's one of probably the most impactful factors in life insurance applications. Meaning, if you don't do this correctly, you will struggle significantly to sell life insurance. Because what you'll do is you'll go into a client meeting and you'll have all this fun stuff and you'll do a needs analysis and you'll tell them the importance of life insurance. They agree to buy it. It's a certain premium. You send it into the insurance company, go through this whole process. Maybe they need exams and labs. Maybe they don't. Maybe we need medical records. Then we get to the offer from an underwriter and it comes back and it's not what you had sold them. So now you have to go back to that customer and say things like, well, you're going to have to pay this much more to get what we had talked about. And you have to resell that case all over again. And that's a really hard thing. So I call this my Magnificent Seven. These are the 7 questions you absolutely must know about your client before you quote something for them. Before you give them that quote that says, here's how much this life insurance that we just discussed is going to cost, you have to know this information. So if there is stuff that you do want to write down and take notes on this call, this would be the one. So starting off, we're going to go with whether or not they were rated or declined in the past. This is a very important question for a couple of reasons. Number one, it helps the insurance company identify if there have been possible medical or financial concerns in the past. That is generally why someone is declined, is financial reasons. And then medical concerns are usually why they are rated. So it helps us when we see an application that says, I'm perfectly healthy, I have no issues, but I was rated or declined recently. That's something we need to investigate. It also helps you as the agent understand that, yes, there are some concerns that we need to address right from the start so that we don't set false expectations. So that's all you need to ask. Have you been rated or declined in the past? Number 2 is one that I see almost, if not every day, multiple times a week. Tobacco, nicotine, and marijuana use. Do not ask your clients if they are smokers. That does not help when it comes to life insurance. Do not ask them if they use tobacco. There are so many variations of quote unquote tobacco out there today. You've got vape, you've got nicotine patches, you've got nicotine gum, you've got nicotine pouches that don't have tobacco in them, but they do have nicotine in them. And we need to know that. Most insurance companies need to know if there is nicotine or tobacco use. So don't ask if they're a smoker, because they could be a chewer, they could be a vapor. So ask it specifically like that. Do you use tobacco, nicotine, or marijuana in any form? If you say it that exact way, you will rarely have a problem. Tobacco and nicotine can vary wildly among insurance companies. So for example, with Protective, if somebody admits to using any form of tobacco, they're going to be tobacco users. So if they chew tobacco, they're going to be a tobacco user with us. If they vape and their urine specimen is positive, they're going to be a tobacco user. Some companies will allow chewing tobacco as a non-tobacco rate. So that's why it's important to ask this. You can get different rates, whether it be tobacco or non-tobacco, with different companies based on actual use. So important to use that. Marijuana, it's another one. Put your client's mind at ease. Do you use marijuana? It is okay to use marijuana with the vast majority of life insurers. It just depends what rate they're going to get. So we don't care if they're in a state where it's legal or not. They're never going to get in trouble for admitting marijuana use on a life insurance application. But again, the guidelines can vary differently among all insurance companies. So for example, with Protective, we allow marijuana use at non-tobacco rates up to a certain number of times per week. Some carriers allow more use, some carriers allow less use, but we need to know that. We need to know it up front so that we can quote them correctly. If you're quoting select preferred non-tobacco with Protective and they are a marijuana user, you're going to get standard non-tobacco, which puts you back in that scenario we just talked about. You're going to have to sell that premium all over again, and it's going to be a much higher premium. So help set that expectation up front. Help that client understand that we need to know about marijuana use. It's okay. Just let us know how you use it. And again, it doesn't generally matter how they use it, whether it's edibles or whether it's vaping or smoking. We just need to know that how frequent the use is. So that's the tobacco, nicotine, marijuana question. The next one I call BBC, build blood pressure and cholesterol. These are all guidelines that are on underwriting guides, but you need to know it because again, you can look at somebody and think that they're healthy based on their height and their weight. That's the build portion. But you don't know. It's really hard to guess, 20 pounds here, 25 pounds there can make a difference in what rate class you're quoting. Every insurance company has a guide. Just ask them, what's your height, your weight? Some people are embarrassed to give their height and weight. With life insurance, you have to explain to people that it is fairly invasive. I need to know more about your health, your medical situation, and your financials. That's just how it's going to be. So it can be awkward to ask, but you need to ask their build, their height and their weight. And then you can know exactly based on the underwriting guides, what rate class to quote them. Not all people might know their blood pressure and their cholesterol, and that's fine, but they will know if they're on medications for that, which will indicate that there is a problem. It's okay if somebody is on blood pressure medication. They can still get select preferred or the best possible rate class with a lot of insurance companies, but there has to be control. So the key is you've got to ask them, do you know your blood pressure or your cholesterol readings? If you don't, that's okay. Are you on any medications for them? If they're not, that's about the extent you can do. You can't really tell them to go get a blood pressure test or a cholesterol test just so you can quote them. But the control is the key. So if somebody says, yeah, actually, I am on blood pressure medication. Okay, how long have you been on blood pressure medication? Well, my doctor just put me on it last week. Okay, that's going to be a problem because that means they have high blood pressure that is not controlled over a significant period of time, probably not going to be in the preferred or select preferred rate. So again, these are things that you can learn as you go along, but they're really important to ask up front. So build blood pressure and cholesterol. The next one is just general medications. And it's not just important to ask, hey, are you on any medications? You need to ask the drug name and the dosage, and then how long. So again, control is the key with a lot of the different medications that people might take. But don't just ask somebody, are you healthy? Do you take anything? Do you take any medications? That's very important. Current or recent, because we might have an underwriting concern of someone who just came off of a medication. We might need to see that whatever that was controlling is stable for a period of time before we can give them a better rate class. The next one is family history. This is one we see an awful lot, where an application will come in. Maybe the agent did talk to the client, say, hey, do you have any medical concerns? Maybe they went through all this stuff and said, hey, do you have any heart problems? Do you have any history of cancer, anything like that? And they say no, but the family history is very important. We're talking immediate family members. We're generally dealing with heart disease and cancer. Those are the two main concerns that we have from a family history perspective. So if they have an immediate family member that has either died or has experienced heart disease or cancer prior to the age of 60, we need to know that information. And this is standard with most insurance companies. There are a couple that vary, but most insurance companies need to know this family history. So for example, let's say my dad had heart disease at 65. That's not going to impact my insurance because he was over age 60. But if my father had heart disease prior to age 60, the insurance company wants to know because I am genetically predisposed to potentially have that same issue. So ask them about their family history of immediate family members, whether they have experienced or died due to heart disease or cancer prior to the age of 60. Hobbies and avocations is another fairly big one. We're talking scuba diving, skydiving, rock climbing, aviation, whether they're a pilot or a private pilot, any kind of racing, whether it's motorcycle racing or car racing. We need to get a completed questionnaire if they answer yes to any of those. I've seen enough cases come through where people are extremely healthy. There is absolute nothing wrong with them medically, but they are avid outdoorsmen, or they are, extreme rock climbers or extreme skydivers. That can significantly impact the rate that you're quoting them. They might not be able to get a select preferred. They might even get a table rating depending on the level of their activity. So get a questionnaire. You don't need to know a lot about those hobbies and activities. You just need to be able to get the information on the questionnaire that we require. The last one is a big one as well. It's driving record. So we see a lot of applications come in where people quote select preferred. Again, perfectly healthy, no other issues, but they've got 5 speeding tickets. That's a problem. Driving record does go into a life insurance application. So generally we want to know about moving violations in the past 3 years. And then if there's been any DUIs in the past 5 years. That's as simple as you need to make it. How many moving violations in the past 3 years have you had? And have you had a DUI in the last 5 years? Important to ask those questions because, again, all of these can bring a surprise to you at the end of an underwriting case where you now have to go back and sell a much higher premium. And it's very disruptive, and it can be very frustrating to the client. So that's the Magnificent Seven. Learn it and use it, and I guarantee it will make your life a lot easier, and it will help cases go through much more smoothly because you'll set the right expectation up front. All right, last thing we want to talk about is submitting business. This is not going to be a tutorial on how to submit business, more as kind of the ways that business is submitted and maybe tools that you can use to do it more efficiently. So generally, there's 3 ways to submit applications with insurance companies. You can either do a paper application, which I don't recommend. You can submit it electronically directly to that company, or you can use a third-party software. The last 2 are very similar, but as we know, paper, you have to download and print the pages. A lot of times these are 30, 40, 50 pages that you have to go through and complete. There's a higher risk of missing information, and then you have to get that application to us. You got to mail it, fax it, or email it to us. So there's some security issues with that as well. It does generally increase processing time by about 2 to 3 weeks if you decide to do paper applications. And it also can impact the ability to get accelerated underwriting with certain insurance companies. So paper applications are kind of become a last resort type situation. There are certain scenarios where paper application works. And, Jamie and Lexi can certainly help you with how to understand that. But for the vast majority of the applications you're probably going to submit, you're going to use one of the electronic options. So most insurance companies, you can log in securely with that company and do what we call a drop ticket. And I'll use that terminology. A drop ticket is basically some reduced information that you need to provide to us. You don't need to provide all of the information that would be on a normal application. You will submit some very basic information, and then we as the insurance company will call the client and do a telephone interview with them and complete the full application. Some insurance companies will allow those customers to go online and fill that out digitally through a secure site. And then we can collect those signatures either electronically or through a voice signature. Protective actually has a voice signature. So when we call that customer and get that information from them, they verbally sign that application and we don't ever have to email them anything. So it's really efficient. And it does drop that processing time by 2 to 3 weeks. The third-party software works very similarly. You're just going through one platform to get many carriers as an option. So for example, iPipeline is one of those, and I'm pretty sure that's what you guys are using at Stonehill. If I'm not mistaken. Okay. Yeah. So very similar process. You go in and you drop the ticket, and then it comes to us, and then we follow that same process that we just talked about, where we do a telephone interview. It's just a different way of getting it to us. So both of those are very efficient, those electronic submissions. And if you haven't done those, we'll certainly go through that in more detail, on future webinars. But I did want to mention, as far as our tools, we have a platform called Velocity, where you can do exactly what we just talked about and drop that ticket. We allow English and Spanish on our interviews. So if you have customers that are Spanish speaking and you don't know Spanish, you can direct them right to us and we can complete that with them in Spanish. We do have an accelerated underwriting program on all of the products that we've talked about, where they might not need to get a physical exam and we might not need to get medical records. I mentioned the voice signature as well as the e-signature, and then electronic policy delivery, which is also a must. Instead of getting a paper policy and having to deliver that to the client, it can all be submitted to them electronically and signed digitally in a matter of minutes rather than days or weeks. This is a little bit how that IntelliLife interview process works. If you haven't been familiar with it, or if you haven't done one, you basically submit a very limited amount of information to us, and then we, our own employees of Protective, will call the client pretty much within the first 24 hours of you submitting that to us. We will get all the information from them. We will schedule their exam if they need it. We'll order medical records and request all the additional information. So you're essentially having somebody else do all the application paperwork. You're having Protective do all of that, or whatever carrier it is with. Most of the carriers have these types of options. But rather than you sitting down with your customer for 40 minutes or 50 minutes and filling out a paper application, you're allowing us to do that verbally over the phone with them and signing it digitally.
And there's also a paper kind of version of this as well, right?
Correct. Yep. So a couple of key things with ours. We have text message. So that IntelliLife Easy app worksheet that you see right on the screen there, that is a one-pager that we have. So if you're in a spot where you can't submit something electronically, but you need to capture that information with the client, maybe you're out in the woods or you don't have Wi-Fi wherever you're at, you can fill out a one-page drop ticket. We call it an easy worksheet. And then you can email that to us instead of getting online and entering the information that you've already collected. So yes, that is an option. And then we also have reminders that we will text to the customer. Once you submit the application to us, we'll text the client. We'll call them, but then we'll also text them saying, hey, don't forget to call us and complete your interview. You can also directly transfer that client. If you're on the phone with them and you're submitting that information to us, you can forward that call right to Protective once you've submitted it, and we can do the interview right then. So very efficient way of kind of working this technology to process these applications faster. And then I mentioned we do have voice signature as well, which is over 97% of our applications now. I know that says 94, but I think we're up to about 97% of our eligible customers verbally sign their application, which cuts about another 2.5 days off where we're not trying to receive an email back and forth from them. And if you've ever had a call from one of those customers where they say, I can't get into my email or I can't remember my password, we eliminate all of that with the voice signature option. So it's very effective. I also mentioned we do have our accelerated underwriting program. It's called Plus. A lot of companies have this now. So one reason for you to be more focused on submitting business electronically with companies is it can access this type of a program. So if you submit a paper app with Protective, you cannot get this program. The client cannot get the option for accelerated underwriting. And all accelerated underwriting is it potentially means that we might not need a physical, an exam, or medical records. So it can go into us, it goes to an underwriter, and then we can make a determination based on the other information that we collect just to issue that policy. So it can cut significant amount of time off of the underwriting process. We've seen applications submitted and issued within the same couple of days, within 2 or 3 days, compared to weeks and even months when it comes to a normal paper process. This is eligible for policies up to $1 million for ages 18 to 45 and up to $500,000 for ages 46 to 60. So if you've got a 45-year-old that's applying for $1 million and they're either going to be standard preferred or select preferred, and you submit that electronically to us, that is an eligible case. It will run through, and if it meets all the criteria, we won't need to give an exam to the client and we won't need to get medical records. It will go through underwriting and issue within a couple of days. So very efficient process. Make sure you're taking advantage of those with all of the different carriers. And then again, the last thing is electronic policy delivery. You really want to make sure you're using this technology, because trying to deliver paper policies can cause a lot of problems. It can cause a lot of delays, especially if there's amendments that need to be signed. So the faster you can get this in the client's hands, the faster they have that coverage in force, and the faster you get paid. So I know that was a lot of information. I kind of hopefully set the stage that we'll go into more detail on a lot of this stuff. But some of the key takeaways: check out our life checkup kit that has those tools that we talked about. Those are guides that can help you and your customer throughout the life insurance conversation. Don't forget the field underwriting. Those 7 questions you have to ask so that you can position that premium correctly up front. It reduces the need for you to sell it again on the back end. And utilize the technology that we have here. So what's the difference between submitting it drop ticket or electronically versus paper? You know, that's a big impact on the turnaround time to get it placed, but also the amount of time and effort you spend on applications. You should be spending more time with your customers, having those conversations with them, rather than filling out paperwork and submitting requirements. So that was a lot. Jamie, if we want to open it up, if there's any questions, I'd be more than happy to answer any of those questions that anybody might have.
So as Dan mentioned, we do need that information in order to properly quote the clients. And Lexi and I can also, if you want to gather that information, we can send that information to not just Protective, but all of our carrier underwriters and do a quick quote so that we can get an idea of what's the best rate to quote the client before an application is submitted, which carrier is going to offer the best rate. So if you want to collect that information, just send it over to us and we will send out those assessments.
Yeah, and again, most of the documents that we've referred to in here, they're available on that life checkup kit. So I will get those to Jamie, and Jamie, if you want to get those out to these people, so they don't have to go searching on the internet, I can get them to you so you can actually have them.
Thank you for attending, and we'll see everybody the next session.